day, grade 12 learners. Welcome to today's accounting lesson. My name is Mrs. Bella Makhetla, and this lesson is brought to you by the Northern Cape Department of Education in collaboration with Pagama Research and Development. Now, on today's lesson, we are revising on financial statements and specifically the statement of financial position. All right. So by the end of this lesson, you need to understand the basic concepts that are related to financial statements. You need to be able to prepare a statement of financial position with the appropriate financial information by applying the correct format, right? So then the knowledge that you need to have before we start with this lesson is that you need to know what financial statements are. When I'm talking about financial statements, what am I referring to? I'm referring to formal records that are summarized that are summarizing the company's financial information and performance, and then it gives us a clear picture of the financial health of the particular business. All right. Then what you need to know also, you need to be familiar with our accounting equation. Now, our accounting equation refers to the formula or principle in accounting that says that the assets must be equal to its liabilities added with its owner's equity. Otherwise, the company hasn't recorded the transactions correctly. So that is what the accounting equation is all about. And then because today we are busy with the statement of financial position, it's very relative that we interact or we show you how it's actually working in the statement of financial position. All right, so before we can go into this lesson, let's quickly do a baseline assessment. Now, it says they analyze the information below, calculate the missing amounts from A to D. Okay, so here's the information provided. This is a statement of financial position. You are required to calculate the missing amounts given or denoted as A, B, C, and D. So I'm going to give you 3 minutes to quickly complete that. See you in 3. Welcome back, grade 12. So let's look at our statement of financial position. Now we have our assets and then our total assets given to us over here. So what is the value that we are going to have as A? The value that we are going to have as A, if I know my format and my structure, I will know that A, my total assets must be equal to my equity plus our liability. So this amount is the one that has to be here, 6800,000. That's where I got the amount. All right. Then for B, I know that this is the balancing figure. All right. So the balancing figure is meaning that I have my current assets. This is my total. I must know my format, that if I add my inventories, trade and other receivables, and cash equivalents, if I add these, then I will surely get this value. So in order for me to get this, I need to work inverse. So I'm going to say 1820000. I subtract my inventories, I subtract my cash equivalents, and it will give me the value for B. All right. Then I will attempt to do my non-current assets. If I know my operations and I know my format and how to apply my format, then I will know that the total assets subtracting my current assets, right, will give me my non-current assets. All right. Then from that point on, once I've calculated my non-current assets, I will then be able to calculate my financial assets. Why? Because I will know that when I add my 2 non-current assets, it will give me the total that goes under non-current assets. So in order for me to find my financial assets, I need to work inverse. So meaning I'm going to take the value for C, subtract my financial assets of 160, and then it will give me my fixed assets. And that is the value over there. All right. So let us quickly talk about the terminology then. The terminology that will be used today is assets specifically. These are the business's possessions used to generate profit and are classified into two categories, namely the non-current assets and the current assets. So these are the possessions of the business. And non-current assets meaning that we are owning those assets for more than a financial year. And then the current assets are the assets that we are owning for 12 months or less. Okay, so then that is what the assets are. When we are talking about shareholders' equity, we are talking about the amount attributable to the shareholders. It consists of ordinary share capital and retained income. So whenever we are doing our statement of financial position, and we have to calculate our share equity, it means that we will have our ordinary share capital and add it together with the retained income to be able to get the total of our shareholders' equity. All right. Then our liabilities. These are amounts owed by a person or business to another, right? They are classified into two categories, which is the non-current liabilities or the current liabilities. Now, non-current, meaning that we are owing that particular amount for more than a financial year, or a current liability. It's a liability that we can settle within this financial year. All right, and these are the categories or the classifications that are required in the accounting equation, right? It's our assets equals to our owner's equity added with our liabilities. All right, so before we can start doing any calculations relative to the statement of financial position, we need to know how the format actually looks like, and we need to know the format and the operations of that particular format. So, as I've already highlighted, that our statement of financial position is highlighting our accounting equation, which says our assets are equal to our owner's equity plus our liability. In this case, because we are dealing with shareholders, this is actually called share equity, but it's the same principle. So what does this mean? It means that my financial position is structured in such a way that it applies this accounting equation. It says that my total assets must be equal to my equity plus my liabilities. Are we fine? So then it means that I have to say the shareholders' equity added with the non-current liability and current liability, because this forms part of my liabilities. Then it will give me my total owner's equity. So meaning that our assets, if we do calculate our total assets to be 1 million, it means definitely then our total equity and liability must also be 1 million. All right, then let's quickly go through it then. So the first aspect is the assets. We highlighted that we've got two categories under assets. We've got the non-current assets, and we also have the current assets. Now, under our non-current assets, remember these are the assets that we own for more than a financial year. That will be our fixed assets being our vehicles, equipment, and land and buildings, okay? And this value is at carrying value. That is why we do the fixed asset note, so that we can get the carrying value at the end of the financial year, okay? Then we've got our financial assets. Now, these are the assets that we are going to own for more than a financial year. So we are referring to our investments, fixed deposits, and so forth. So our financial assets, because this financial assets part is under non-current asset, it means that the assets should be invested for more than a financial year for them to qualify to be placed under financial assets. If the financial asset is maturing within the financial year or in the next 12 months, then that portion no longer belongs under non-current. It belongs under the current aspect, and we will obviously put it under cash and cash equivalents because it's going to affect our bank account. Our bank account is going to increase because that financial asset will be withdrawn or deposited into our account in the next 12 months. Okay, so then let us go to the current asset aspect. Now, our current assets are the assets that we are going to own for 12 months or less, okay? So we've got our inventories. That is our inventory on hand, whatever is left over from the previous financial year. Then we will have as our inventories over there. So the inventory that was not sold in this financial year, plus the consumables on hand, meaning the stationery or packing material that we did not use in this financial year, then obviously that is what we are going to put there. Okay, then the trade and other receivables is all the money that we are waiting to receive, the people that owe us. Okay, so we are dealing with debtors. We are yet to receive the money. That's why it's receivables. We are yet to receive it. Okay. Then we've got our cash and cash equivalent. And our cash and cash equivalent is basically the money that we have in the business that we can actually settle things very quickly. It's liquidity based basically at this present time. And then that is our bank account, our petty cash, our cash flow. It's giving us that type of information in that note. All right. So when we are calculating this, we know that our current assets, in order for us to calculate current assets, we need to add the 3 to get to the current assets. Okay. So that is our current assets portion. Another thing, however, in our cash and cash equivalent, should it happen that we have an overdraft, right? Like a bank overdraft, then that is a liability because now then we owe the bank. Our bank account is in the negatives. So then a bank overdraft cannot go under assets because we don't own that money. We owe it, right? So that means that that bank overdraft will be written under current liabilities because that bank overdraft will be paying within the next 12 months. Okay, so let's quickly go to the equity and liabilities section. Our equity and liabilities section deals with our ordinary share capital and relative to note number 7. So the examiner sometimes gives you a note number 7 to complete, right? Once you've completed the note number 7 and you have found the balance of it, then you are just going to simply copy and paste it there. Then you will get your principal mark for knowing that whatever note that you had to do, you had to transfer the data to the statement of financial position. Then you have your retained income. Now your retained income is also a note that you can complete, that the examiner can give you to complete. Once you've completed the note, you have to take the balance of that note and copy, paste it over there. That is the principal mark that will be awarded there. All right. Then when you add the 2, you will then get your share equity. Then we have our non-current liabilities. Now our liabilities, in this case, we have a loan, mortgage loan. And what we are looking for is the non-current part, meaning the part that we will owe for more than the financial year, right? So that is the non-current liability. So you will take the amount that you owe, right? That's the loan amount. Then you subtract the repayment that we are going to do in the next 12 months, because that repayment is something that we are owing for the next 12 months in the short term. So we cannot have that amount falling under our non-current aspect, because non-current means more than 12 months. But now the repayment, we are not going to owe for more than 12 months. Hence, we need to take the repayment to the short-term loan, and that is the repayment amount. So if you have calculated your repayments to be 50,000, and that is what you're subtracting under your loan, you have to write the very same 50,000 under the short-term or current portion of the loan, and that will award you your principal mark. So normally the loan question is plus minus 5 marks if the examiner is actually interested in how or whether you are able to calculate this amount or not. So you have to show your workings. That's another aspect. You have to take the amount that is outstanding and you subtract the repayment. That very same repayment, you copy and paste it in the short term, because current means short term, within the next 12 months. Okay, so then that is the situation with our loan. Moving on to our trade and other payables. Our trade and other payables, those are the amounts that we are yet to pay. We have not yet paid it. That's why it's a liability. We owe that money and we have to pay it. So it has its particular note, and once you've calculated that note, then you will then take that amount and paste it over there, and that will award you your principal mark. Then we've got our SARS income tax. Now, our SARS income tax is what we still owe. So if the examiner gives us information with regards to our income tax and says that a particular amount is still owed, right? So then we will put that amount under our current liabilities. We can either put it separately like this, or it's also acceptable if you add the SARS income tax to your payables note. Okay. Same with the shareholders for dividends. Shareholders for dividends is a liability. Now, this is our final dividend. Okay, so we declare the final dividend. However, we do not pay it. We pay it in the next financial year. So then it will be a liability that we still have to settle in the next 12 months, as it's under the current liabilities section. Okay, so then you can also add it to your trade and other payables, or you can show it separately. It's still acceptable. Then I've highlighted on the bank overdraft that the bank overdraft, if the bank is in the negatives, meaning that we have spent more than what we actually have in our bank account, then we will take the bank overdraft and put it in our liabilities section. However, you need to take into consideration the transactions that are taking place in that question. So let's say your bank is in overdraft and there is a financial asset that has matured, but it was not recorded. Then that changes our bank overdraft amount. Or there's a particular transaction, for example, you sold shares or you bought shares and it was not recorded, then it will definitely change your bank overdraft amount. Okay, so how do you then calculate your current liabilities? Then you are going to add all the current liabilities together to get your current liability there. Then that will award you an operational mark. Then, in order for you to calculate your equity and liabilities, you are going to take your shareholders' equity, you add your current, non-current liability, and you will also add your current liabilities for you to be able to get your equity and liabilities total. All right. So if the examiner gives you this type of question, then you will be able to calculate the total equities, and then you will be able to apply that total to your current assets. All right. Now, with that said, grade 12, now on the trade and other receivables note, this is note number 5, okay? And this is note number 5 of the Statement of Financial Position, and it forms part of the Statement of Financial Position. So now the receivables is the money that we are yet to receive, okay? Those are the people that owe the business in the short term, all right? So trade debtors, we are referring to our debtors control that you will receive or you will have from your trial balance. Now, this amount can change based on the adjustments that are presented before you. So if you have a data that you have to write off, then obviously this amount then will decrease. And then if data returns good to the business, like such transactions have an impact on your trade debtors. So you will show the workings in this section. You open your bracket and you plus and minus accordingly based on the adjustments, okay? And then once you get that, then you will then write the total that you are going to get in this column, in the answer column. Then we've got our provision for bad debts. Now, our provision for bad debts, we have the provision for bad debts provided to us by the examiner in our trial balance. That is the provision for bad debts for the previous financial year. Then the examiner will give you information that will help you to get to the provision for bad debts for this financial year. All right. So it means that you need to change the provision for bad debts of the previous financial year to be the new one for this financial year, which is the one given to you under the additional information. All right. So if it was 1,000 in the previous year, and in this financial year it needs to change and become 1,500, then the 1,500 will be then written there, because this is the new provision for bad debts. Last year, it was 1,000 that's given to you in the trial balance. And then the change between the 1,000 and the 500, that is our 1,500, that is our adjustment, meaning the 500 is our adjustment. And that adjustment is the one that is stipulated in our statement of comprehensive income. In the trade and other receivables, we are dealing with the actual provision for bad debts, the new one. All right. So you will have the provision for bad debts. Then you take the trade debtors amount, you subtract your provision for bad debts, and that will give you your net trade debtors. Okay. Then from that point, you are going to take your accrued income, right? That is the income that you have not yet received, right? Can be rent income. Normally, you would have removed it from your statement of comprehensive income. And then you will bring it then now to your statement of financial position under trade and other receivables, right? Your rent income and so forth. Then you will have your prepaid expense. That is an expense that you've paid in advance. So normally it's your insurance, your director's fees, and so forth, right? So you would have removed it from your statement of comprehensive income, right? So you added that particular amount, you subtracted that particular amount from your director's fees, from your insurance, and then you take that specific amount and you bring it into your trade and other receivables note. Then you will add that amount, no problem. Then the SARS income tax. Now that is the SARS income tax that we have paid more than what we were supposed to. So the income tax is maybe 1 million. We have paid 1,200,000. So SARS has our 200. All right. So then it will be over here. Then we write the amount that we have paid in advance, or that we paid too much of, the excess 200, okay, 1,000. Then if we have paid towards a deposit for water or whatever deposit that we've actually paid, then that particular institution has our money. And obviously when we do terminate the contract or whatever the situation might be, then that institution has to pay us back our money. Hence why we will indicate our deposit under trade and other receivables, right? Then finally, once you have that, you add that all together, meaning your trade debtors plus all of this, and then it will give you the balance of your trade and other receivables. All right. So let us quickly do an activity based on the trade and other receivables note so that we can see if you've really understood what I've been trying to explain. And then I will give you 6 minutes to quickly complete this, and then we will quickly talk about what was transpiring in the activity. All right. So this is our totals provided there, and then these are the adjustments relative to that. Okay, so see you in 6 minutes. Welcome back, grade 12s. I know 6 minutes seems like it's a short time. However, you need to work on your time management skills, right? Because you know in the exam room, it gets quite hectic because of time. So you need to get on moving when you start doing these activities. Try to be as fast as possible and as accurate as possible. Now, let's go to our trade and other receivables note. Now, the examiner has given us the amount in the trial balance, So the 214,300, right? And then the examiner said the following. They said that a creditor's credit balance of 1,500 in the creditor's ledger must be transferred to his account in the debtor's ledger. So what are you going to do when it comes to this? We are dealing with creditors. So when we're dealing with creditors, we know that the credit side is positive and the debit side is negative. Okay. So they say that you need to transfer a balance that is on the credit side. So what do you need to do? You need to then cancel it in our creditor's ledger. So when you cancel it, it will be a negative. It will be on the negative side. And the trick is that the signs will always be the same. So as soon as you say on the negative side, it means that you need to go to your debtor's ledger, right? In your debtor's ledger, we are dealing with debtors. We know that it's positive on this side and it's negative on the credit side. So you will debit in your creditor's ledger and you need to credit in your debtors. Do you see that it's got a negative impact? So when you are dealing with this type of transaction, you need to understand where it's coming from. If it's coming from your creditors and it's on the credit side, in order for you to cancel it in your creditors, you need to then put it on the debit side. And debit for creditors is a negative. So then you will have a negative in your trade and other receivables, and you will also have a negative in the trade and other payables. Right. So that is how it works. Okay. So then let's quickly go to our trade and other receivables because we know it's a negative. It's on the credit side. All right. So then I subtracted my 1,500 and then it will give me my trade debtors amount there. No problem. Okay. Then we've got a provision for bad debts. Very simple. I just copied and pasted the new one. Okay. They did not say anything about the adjustments, so I'm assuming that it's the same. All right. Then I calculate my trade debtors. I will say that my trade debtors subtract my provision for bad debts will give me my net trade debtors, which is 207,600. No problems there. Then I know that in my trade and other receivables, there are must-be's that I need to look at. Must be, it's normally a accrued income. I need to check. Do I have an accrued income in this type of transaction? In this transaction, in this information activity, no, there was no accrued income. So then you don't even have to write it in the first place. I just wrote it here just to explain that concept. Okay. Then we've got the prepaid expense. Now the prepaid expense is our director's fees. Now our director's fees, the examiner said the following. The examiner said that the company has 3 directors, the same fee. One was paid 2 months in advance. So we have paid more than we are supposed to for that particular director. So then that director has a salary that they did not work for. All right. Then we will obviously now have to indicate it then. So we will quickly go say that we know that it's 3 directors, and they earned for 12 months. So that gives us 36, okay? However, there is a payment that we've made for 2 extra months. So the total amount of payments that we have made is 38. And the amount that is prepaid will be for 2 months, okay? So how much will that value be? It will be the total amount from our trial balance multiplied by what we are looking for. We are looking for the 2 months out of the total of 36 months, and that will give us 96,000. Okay, so then we quickly just write the amount there. Should it have been indicated in our statement of comprehensive income, we would just get a principal mark for that. But for the calculation, you obviously get more marks. Okay, so the SARS income tax, we had to look at how much was owed and so forth. Let's quickly look at what the examiner said. The income tax for the financial year was accurately calculated as 309,000. Okay. Then we look at our trial balance. Our trial balance or other balances says that our income tax that we have paid, the amount of money that we have paid towards income tax in this financial year is 359,000. Now, the question is, how much were we supposed to pay? We were only supposed to pay 309. So we have paid more than what we were supposed to pay for this financial year. Okay, so then we will obviously know that this is a prepaid amount. We have paid in advance. All right, so then it's a receivable because SARS has our 50,000 with them. That was not for this financial year. So then we will quickly then do a small calculation. 359,000 subtract what we were supposed to pay, and the amount that is in advance is the 50,000. All right. Then our deposit for water, I believe it was written in our trial balance. So we just copied and pasted. If I know my format, then it's easy for me to detect that I need to copy and paste something. If I did not know my format, then obviously I would have lost this mark. All right. So it's very important for you to know all your formats. The examiner can ask you the trade and other receivable notes as a particular question, or the examiner can ask it in the face of the statement of financial position. You have to know your format, whether the examiner is tasting it in terms of calculating it separately or on the statement of financial position. All these amounts presented here has to be shown and reflected. So all these marks can be actually tested simply on the statement of financial position. So it's very important for you to know your formats, grade 12s. All right. So then you are going to add everything for you to be able to get your balance, which is 364,600 for trade and other receivables. All right. So then let us do another activity now, right? Now, this activity says the following. It says that you need to complete the assets section of the statement of financial position on 30 June 2023. And this is for 8 marks. So I'm going to give you another 5 minutes just to quickly complete this. All right. See you now. Welcome back, grade 12s. Now let's quickly go through the activity, right? So in the activity, the examiner gave you the total equities, right? And the examiner gave you your current assets. Then it would be very easy for you to calculate your non-current assets. You are going to say your total assets over here, because total equities equals to total assets. We know this by now. All right. So then we are going to say the 4,527,400 subtract our current assets will give us our non-current assets. No problems there. All right. And then the examiner gave you your fixed deposit there. Then it will be easy for us to calculate our our fixed assets. So then we are going to say our non-current assets given to us or calculated to us as 3,11,119,800. Subtract our fixed deposit, right? And then it will give us this amount. So these are all operational marks, grade 12s. So you have to know how these operational marks operate for you to maximize your marks for the statement of financial position. The one thing that you need to take note of is that the statement of financial position will give you a lot of principal marks or operational marks. So if you are able to do certain workings and know how to apply the format, then you will definitely benefit from it. All right. So now we already have 2 marks there. And then now we can calculate our current assets. Now our current assets, the examiner gave us the inventory amount, no problems there. Then we've already done our trade and other receivables. So I will definitely just copy and paste the amount, and that is a principal mark for knowing that the trade and other receivable notes that we've just calculated total must come to our statement of financial position. Then our trade and cash and cash equivalents over here, then we know that this is the balancing figure, right? So what are we going to do? We are going to say our current assets subtract our inventory, subtract our trade and other receivables to be able to get this amount for the cash and cash equivalents. So this is all operational aspects of the statement of financial position. You need to know how to operate this financial statement. All right. So then let us talk about our trade and other payables. Now, trade and other payables is note number 9, and we are looking at the payables aspect of our statement of financial position or the business, right? So these are the people that we still owe, all right? So trade creditors will be creditors control. And like I've mentioned, for the trade and other receivables, adjustments that are in the exam, additional information, has an impact on this balance. So you will plus and minus according to the adjustments provided to us for you to be able to get to this value. All right. Then you have your trade, your creditors for salaries. These are the salaries we still owe that we still need to pay. All right. So that is there we put our net salary. So whenever you're dealing with salaries, grade 12, you need to understand the concept that you need to pay or you need to allocate for the total cost to company of that particular individual. How much is it costing the company for that particular to pay that particular individual, right? So that means that we are not only going to pay, or the business does not only pay the gross. The business also has other expenses that are relative to that particular individual working in the company. Hence why we have the gross and we also have the contributions. That will be our total cost to company for that particular individual. Now, how do you allocate it or record it in the statement of financial position in the trade and other payables? You will, under creditors for salaries, only write the net. Are we fine? And then the UIF contributions or the UIF will be the deductions of that particular employee plus what we are contributing for that particular employee, and it will give us the value that comes over there. Same applies if we are contributing towards the medical aid. It will be the deductions that are coming from the employee plus our contribution, okay? And then that will give us the balance that goes over there. Then the SARS is being paid by the employee. Then we will also have, so this is all relative to salaries. Are we fine? If there's any other contributions that we are contributing towards, then we will also have it under our trade and other payables for the particular employee that we omitted. All right. So then we have our SARS income tax. Our SARS income tax only comes in the statement of financial position under trade and other payables if we are still owing SARS money. So a situation where we were supposed to pay 1 million, but we've only paid 800,000. So that 200,000 that is outstanding will be indicated under trade and other payables, or it can be reflected separately in our statement of financial position, right, under current liabilities. Then we will have our two adjustments over here. Our income received in advance. So normally our rent income we have received in advance. So then we still owe the tenant because we received the money, but we haven't provided the service yet. All right. So then we will write that whatever amount that you subtracted from your statement of comprehensive income is the very same amount that you need to add to your trade and other payables. All right. Accrued expense. Now that is an expense that we did not pay. Maybe we paid for 10 months or 11 months and there's a month outstanding, then that outstanding amount, the amount that you added in your income statement, is the very same amount that you need to now reflect in your trade and other payables. Then you are going to add all the components involved here for you to be able to calculate the balance of your trade and other payables. All right. So same thing that I said with the trade and other receivables. The examiner can ask it as a separate note, or the examiner can just ask this question within your statement of financial position, and you need to show your workings in the face of the financial position. All right. So it means that you need to open your bracket, write trade debtors. Then you write your net salaries, your UIF contributions, and so forth. You write your SARS income tax, your income received in advance, accrued expense, and also if there is a transfer, you will obviously have that amount there as well. All right. So that is how you approach your trade and other receivables note. So let us do activity 3. Activity 3 says you are required to do the equity and liability section of the statement of financial position. All right. And then here's the information provided, and the adjustments are as follows. So I will give you 6 minutes to quickly go through this activity, and then I will see you in 6, and then we can talk about it. All right. See you in 6. Welcome back, grade 12s. Now let's quickly look at this working. Okay, so it says then the equity and liability section. Now this section is quite easy to actually complete because the examiner has given us the ordinary share equity 2216000. And we also have the retained income provided for us. So then it's easy for us to quickly get back to our ordinary share capital, right? We know that when we add ordinary share capital with the retained income, we get our shareholders' equity. So in order for us to find this amount, we need to do the inverse. We are going to say 2,216 subtract our 785, and it will give us our ordinary share capital. All right. So this is your first operational mark. But if you did not know how to do it, then you would have lost the mark. Okay. So then we go on to our non-current liabilities. Our non-current liabilities, we take the loan amount that we are owing, and then we subtract the repayment, right? And then we will then get our loan that we are owing for more than one financial year. So this is the amount that we are owing after the 1 year period has lapsed. The amount that we are owing for this 12 months, it's the 37200. And that's 37200 falls under the current liabilities section because it's short term. So in plain English, this is what I'm saying. I'm saying that I owe, or the business owes, 2,356,000 in total. However, because now we are using the materiality principle, we have to then allocate our loan in the particular way, right? It has been divided into 2 sections. The 2,356,000 is a total amount. However, a certain amount will be paid within the next 12 months. So then we will take the amount that will be paid in the next 12 months and put it separately. And then the amount that will be paid after 12 months, then we allocate separately. But when we add the 2 amounts, it will give us the total that we owe. The only difference is that we are separating them so that we show them according to the principles that we have to use, which is the GAAP principles. All right. So then we are going to say the amount that we are going to repay is moving to our current liability section, and we will write current portion of the loan, or we can write short-term loan. Okay, so then that will award us our principal mark or operational mark. So this loan question, you will see, is probably out of 4 marks. So out of the 4 marks, you are walking away with 2 because you knew that you had to take the loan amount that we owe currently and subtract something in order to get this value. And then you also knew that whatever that we subtracted is what we are paying in the next 12 months. So then you will classify it under your current liabilities and move it to your short-term loan aspect. Okay, so that is the loan situation. And then So you will see that if you say the 37200, add back the 1984000, it should give you back your loan amount that you actually owe. But we've just separated it based on the fact that a portion of it is long-term, another portion is short-term. All right. So then we move on to trade and other payables. Trade and other payables, our creditors control is provided. No problems there. And then our examiner has given us a adjustment relative to that. Okay, so the adjustment says the following: rent income for March and April 2024 has already been received. This is what? This is a income received in advance. All right. The monthly rent was increased by 10% on December 2023. Now, as soon as we see the situation going on, we know that we must draw a timeline. Okay. So our timeline obviously will have two endings: the actual end of the financial year, which is 28 Feb, and then the amount that the month that we actually stopped paying or receiving the money, which will be for April at the end. Okay, our financial year starting on the 1st of March. So what does this mean? This means that we have received something in advance. But then we move on to more information. They said 10% was added on the 1st of December. So 1 December, there was a 10%. Now let's quickly go through it. From 1 March until December, we were receiving 100%, the whole amount. Okay. Then from 1 December until April, we were receiving 100% of the amount with an extra 10%. So in total, we were receiving 110%. All right. So then I'm going to say my 100 multiplied by the number of months that I received 100%. So it will be March, April, May, June, July, August, September, October, November. I cannot include December because the change happened on the 1st. So we only received 100% until November. So that is 9 months. Okay. Then we will say from December, January, February, March, April, 5 months, we received 110. That will give me 900. And this one will give me 550, right? When I multiply these two, which will give me a total of 1450. All right. So now we can do our calculation. What we want over what we have. All right. So the examiner has given us the rent. The examiner said that the rent is 116,000 that we have received. And we are looking for the 2 months, right, after the increase had taken place. So it is multiplied by 110. And then we divide that by the number, the total amount, right? The amount that was given to us. So then it will give us 17,000. I believe you already have the answer already. 17,210 divided by 1450. 17,600. Okay. So then that's the story. And then you will just say 70,000 plus 17,600, and then you will get your answer 87,600. All right. So this obviously is already shown in your statement of comprehensive income or your net profit after tax, whatever the examiner is testing you on. This amount already is reflected there, but you need to know that you need to take that amount from there and allocate it accordingly. All right. So then we go to the SARS income tax. Now the SARS income tax, the examiner has told us, given us information with regards to that, 60,000 is still owed to SARS. So this is a liability. So we'll just simply copy and paste. No problems there. If we know our theory, no problems. Then shareholders for dividends. Let's quickly go check at the information provided for us. The total dividends was 560. Okay. So what are we looking for at shareholders for dividends? We are looking for the interim dividend, okay? So we know that the total dividend is 5. Let's quickly go back. 560. And the interim dividend given to us is 250. Do you see that? So then we will say our total dividend of 560 subtract 250 will give us our final dividend. All right. Then the bank overdraft is given to us is 70,400. So then we have to just add the 2 and we'll get this one. Or we can just say the 900 which was given by the examiner, subtracting all these amounts will give us our bank overdraft. All right. So that's how the examiner can also test it. So with that said, grade 12s, we have covered the operational aspect of our statement of financial position, and you now know how to do your statement for financial position. Now, there is a worksheet provided for you to be able to complete your homework. Please do that, and I believe you'll do much better in that homework activity because now you understand how to approach your statement of financial position. Let us quickly recap on what we've done today. We said that the statement of financial position is set based on the accounting equation. So what does that mean? Our total assets must be equal to our shareholders' equity plus our liabilities. And then also the formats are critical if you want to get your operational marks. And it's very important for you to know your format so that you can maximize the amount of marks that you are going to get in the statement of financial position. Now, in the next lesson, we will be looking at the following aspects. We will be looking still on the statement of financial position. However, we'll be looking at the transactions between the financial assets, cash and cash equivalents, and the bank overdraft so that you'll be able to apply it accordingly so that you can get the maximum amount of marks. We'll be also looking at other aspects like the integration of financial indicators into your statement of financial position. Now, with that said, grade 12s, thank you very much for joining the lesson, and I will see you in the next lesson. Have a good one. Bye.